Good weekend all. Ira Epstein of Linn & Associates with your metal market wrap-up, and this is your weekend edition for Friday, December 4th, 2020 at 6:40 p.m. Central Time. Before I get too far, a couple of things I'd like you to do for me since you watch this. If you like these videos, please click on you like them just so that Facebook followers get to see, hey, what's going on with that guy's website? If you don't like them, do that too. I'm giving away my charting course for free. Yeah, $199.95 course for free. How do you get it? At the end of this video, I will explain it to you. All right, so here we are, strong stock market again. As I said in my financial video, the market has taken the attitude that anything in the way of relief packages overwhelms the bad headlines of COVID-19 and the fact that even Dr. Fauci said we're not even close to a plateau. We're going to see another big surge in cases. Hospitals are overwhelmed under normal circumstances. You would think that would hold back the stock markets. Not doing it. In the gold market, and with this about gold, gold can't even rally as the dollar falters. So the gold is not the story just yet. And you know, I get so many newsletters of the die-hard gold bulls. That was the break. This is your opportunity. I'm not arguing that they're wrong or right. I'm just saying that's not the move right now. I can see copper being the move. I can see platinum being the move. I can see silver trying to bottom out. I don't see gold without inflation being that story. Is the story coming? Probably. Unfortunately for gold, it has to fight Bitcoin. And Bitcoin is a better story than the gold market because investors that want to store value have decided, for whatever reason, right or wrong, I know the diehards will think I'm out of my mind, that Bitcoin's better. Do I think Bitcoin has any value? No. Would I rather own physical gold if the world came to an end? You betcha. Because that Coinbase, that exchange, the CME, in a world catastrophe, do they all exist? I don't know. But I know that I've got that gold in my pocket. That's the difference. Now, the fact is that a lot of people are starting to talk in metals that the digital currencies, they're being taken more and more places. Okay, I haven't run into any that do it. But I am also staying home more than most at this point. We'll see. I still believe that at the end of the day, what the IRS did this week, and remember, we're talking metals, so I want to finish this off. They're saying right on the front page of your new form, do you own any of these digital currencies? Did you trade in them? Blah, blah. They've begun. So if you're trying to hide and use these digital wallets and think you're going to buy things and get away from it, that's coming to an end. When we take a look at a monthly bar chart, the monthly chart is in a correction, not a bear move, in a correction. It would have to be under the 18-month moving average of closes to have the swing line down and then the close under that. I'm not seeing that at this point. In fact, I wonder if it'll happen. I'm just seeing a correction is set in from the all-time high when you got over the 2000 level. Okay. When I come to a weekly chart, you even see better. That and the daily again better because you keep diving down into smaller time frames. But here we've come down. Resistance is back at 1908.70 on the weekly chart. So regardless of any bounce that happens, at best on a weekly chart, it's a corrective bounce, not a change of the overall downtrend. When we come and we look at the weekly bar itself, you can see how the market's pointing down, but it's trendless. You have at this point a higher high and a lower low. A trend is made up on a downtrend of lower highs, lower lows. You don't have that. So it's a move to the downside, what I'll call a corrective move, and the move is under the 18-week moving average. So where's the support? Well, one of the support numbers could be 1576. The 100-week moving average, that's quite a ways from here. It's $200 an ounce. Better yet is the lower Bollinger Band. And while the market got under it last week, it's popped right back over it. These bands will act as, let's think of it as a fence on the upside and support on the downside. That's the way you look at these. And What this market is doing is it's tested the upper band, it tested the lower band. I wouldn't be surprised if that was the move to the downside overall. Does that mean that we have a buy signal? No, but this is a weekly chart, and weekly charts are laggard charts. Keep that in the back of your mind. Momentum, oversold. So I have a market that has corrected again, got to the Bollinger Band last week. Traders, and you know what I said? I said you never go short under a Bollinger Band. You can. I will never say to do that or buy over a Bollinger Band. It's to me just a trap waiting for you. You can get into better prices if you're bearish or if you're bullish or bearish. And here you go. That's my point, okay? I certainly use the daily charts for the overall entry. I do use weekly charts sometimes too if the risks come in enough where I can handle them. The gold-silver ratio, and if we look at this on a weekly basis, I like the daily better, but you got over, so now the question is, in order to make silver look even better, you got to get under that 75.49 level. When we come to the silver chart, I think today on this chart, on the weekly, this is where the market made a big statement that it wants to bottom out against today's low. I'm certainly wrong if today's low of 2200.005 is taken out this week or the week after. I'm right until that occurs, in my opinion, and I'd be surprised that before you take that out, you don't get back up and challenge the 18-week average of closes. Is the chart bullish? It is not. The chart has got a higher high, lower low, oversold. There's nothing going on in here, but you hit a key area. Now the copper market is stretching itself to the upside with an embedded weekly reading. Until that red line closes under 80, this market, in my opinion, will be well supported on breaks. I will state what I've said before. I think that I train people not to in my course buy over Bollinger Bands or sell under them. So they're at an extreme. That's okay. You wait for the pullbacks. It's also a sign the market's very strong. In the platinum, for the first time since, back here in August, you do realize that, August, you're over the upper Bollinger Band. So this washout period ended, and we saw it end. It didn't just happen. Go back on my website. You'll see, or go to YouTube. The market had higher lows, higher highs. It turned itself friendly. The first objective was the upper band. The momentum had turned up. Market was gaining. This is November 27th. This is now. Feel good with that call. The market that's got nothing going its way is the dollar index. Look at how it's down. Now, it maybe has gotten too cheap right here on this move. We have a Fed meeting coming up in 2 weeks. We have the European Central Bank meeting coming up. You want to be very cautious with all this going into those meetings. At least that's what I would be doing. Now, as I said, I've got something that I'd like you to listen to if you're interested in taking my charting course. Every now and then for the Christmas season, I come up with an offering. So this is the one that I'm doing. If you buy a 1-year subscription to my research, any of my research programs, I will give you the charting course for free. Now, let's assume you've taken the charting course. You can give it as a gift to somebody. If you're already a subscriber to my 1 year of the futures, take the 1 year to the ETF. Take a 1 year, move up to the full research. There's programs you can join into. If you do that, we will honor it. I'm not telling you when this is ending. It's going to not go through Christmas Day, that I can tell you. Okay, so it's going to end sooner rather than later. But what an interesting way for you to learn what I'm doing and keep up for yourself how to do this. That's really what this is about. I know how to do it. It's teaching you how to do it so you can look at an ETF, a stock chart, a business chart. You import data on an Excel sheet, you know you can turn it into a graph. You can start saying, am I in a bear trend, a bull trend? What's my business doing? You think I don't do that? You'd be very wrong. If it's a data that you're putting in on a weekly, a monthly, a daily basis, you can turn it on Excel into a graph, and then you start adding all this. Now, what makes things even easier is we allow in our charting software in my LGP version for you to import the data and chart it right in that piece. So You can use the swing lines then and all the other studies I have, and my version of how you work with slow stochastics, which is different than a lot of what you do. I get people always say, how come my numbers don't exactly match yours? I had the advantage of George Lane. I don't think you did. I knew George first name basis, we talked to him. So I've got a few tweaks in there that I think work better than the standard that people have. In any case, to find out more or to buy, just go to our website under the word research. It's all there. You can take it to the next step. I'm Ira. You have a great weekend. I'll see you all Monday.